Okay, hello everyone. Welcome to this week's study session. We're going to do both the general market portion and the individual stock portion during this same video. As you know, I didn't do a video yesterday. So combining them, there's not the reason why is there's not a whole lot on either side to discuss. I'll go over that here. Let's take a look at the market first, and then we'll look at individual stocks. So risk model went on a sell signal on July 16, buy alert on July 23rd. You can see the general market's positive. All the rest of the components are neutral, which is actually going in the opposite direction on up down volume. We improved and going sort of back and forth, new highs, new lows, neutral here, of course, and that's a problem when we see that we don't have stock participation. New highs, new lows are starting to diverge. Up down volume isn't really strong. General market indexes are looking, okay here with, you look at the Dow, you see the S&P, they're hitting new highs, NASDAQ. You got to realize though, cap weighted, price weighted, participation is still a problem here. So we're going to get into that in just a second here. Looking at the long-term trend though, we're still solid on the long-term trend, bullish with the S&P 500, of course, 52.9% since we got that buy signal back in April of 2020. So that hasn't budged. And again, it is still long there. So we got the trend, we got the Fed in our corner, which means that we're looking at corrections as buying opportunities. We're continuously looking for new opportunities. But again, regardless of how strong the trend is, how strong the fundamental backdrop is, we got to have setups. We have to have setups. And if the setups are presenting themselves, they've got to be working. That's the main thing. So we've seen a lot of setups, but we just haven't seen a lot of stocks working from those setups. And, again, one of the things that we look at is the FFTY, the IBD 50. And something interesting here too, I wanted to talk about, and maybe a little adjustment that I'm going to make going forward. We've been tracking the FFTY using the, we're tracking the IBD 50 using the FFTY, which is the innovator ETF. And I had a conversation today with Arusha Paris from MarketSmith, and what I noticed was that the IBD 50 in MarketSmith was looking different than the FFTY. So I asked him why that was, and this innovator ETF is actually has some kind of weighting in it, where they're weighting. I think the rankings. He's actually looking into it to get me the exact formula, but it is weighted, and you can see here it's been underperforming, and we're starting to get that pivot here as we come right to that trend line. It would be nice to get a pivot right here, break through that pivot, and get through this downtrend at one time with some stock participation. That's what we really would like to see, either leading that or coincident with that. But again, if you look at the weekly, and I'm going to show you the difference between the FFTY and the IBD 50 in MarketSmith here, you can see that we're outperforming the market in these rallies here. And now we've taken a good long rest. And I'm sure that, during this time where the S&P 500 has gone to new highs, I'm sure that you've been, having some frustrating times, since the beginning of the year. And this is really, and I said this from the very beginning of the year, that the FFTY I felt like was telling the true story of the market, of what we were feeling or going to feel going forward here, and seeing this underperformance all this time. This is really what's led to, no upside in those swing trades and just a lot of short-term opportunities, but no real legs here. So now if we take a look at the investors, the IBD 50 in MarketSmith, this is the unweighted index. So this is just giving equal weight, no weighting to price, no weighting to capitalization, no weighting to ranking. It's looking a bit better, even though all this time, going back since February, you would have been in a sideways, just basing, still a frustrating period. But it looks like we're shaping up better on an equally weighted basis, and I like that. I like to look at equal weighted indexes myself, or at least when I'm looking at my own performance, I want to give equal weight to the trades and not market cap weight them or price weight them. So we're forming a pivot here, and if we can break out of here, this would be a good sign, especially if we can get some outperformance. Maybe we get a rest in some of the indexes, particularly, the S&P 500, the Dow, or the NASDAQ. We get some outperformance here. But what I want to see, and this is on a weekly basis too, you can see underperforming here on a weekly basis, but building a nice base. And this last week right here, you can see we had an outside week. big outside week. Volume was increasing. Recently, we pulled back and we got some support with some volume coming in. Again, I think that we're starting to shape up here, and we want to see a breakout now. Looking at the Russell 2000, which this is another measure that I would like to see doing well to give me that risk on environment. We're coming back to the 50 here, not looking as good. This still has some work to do, but we'll watch this carefully. But still, again, look, since February, sideways the entire time, just back and forth, back and forth, back and forth, back and forth. And that is what causes that market, that whipsaw environment where, you buy into a breakout, you get stopped. You buy into a breakout, you get stopped, and keep going back and forth. You got to wait until, things are working, you're gaining that traction and breakouts are working. So you don't get death by 1,000 cuts. Now, looking at the NASDAQ, we've got a similar picture, except that it's led into new high ground. And recently we pulled back to the breakout, and now we're forming this little pivot, or if you want to call it a little cap pattern. Looks like a little cup with handle. So if we can break out of here, that would be great. I'd like to see the breakout occur with participation in the FFTY. I'd like to see that breakout, and also the IWM improving, and get participation coming into the market. Even though it's okay if we still go up with the Nasdaq leading and some of these indexes that are obviously weighted indexes, that's fine. But we want to see more participation chiming in. Now, if you look at the Dow also has, you got a little shakeout right here. You came back, and now you're tightening up. This is forming a nice little pivot here. So again, I would like to see us break out across the board and see the participation. Now, one of the main ways to look at the participation is to look at the percentage of stocks above their 50-day moving average and compare it to the indexes. And what I'm looking at here is the NASDAQ, of course. And again, we're at 32.97%. with the NASDAQ trading above the 50. That is a very ominous sign when it comes to trading environment. When it comes to the trading environment, this is saying that, almost 70% of the stocks are below their 50-day. They're in an intermediate term downtrend, according, using the 50-day as a measure, as a gauge. So we want to, at the very least, see this improve and preferably get above the 50% level. Same thing with the 200-day moving average. We're at 45.66% with the index well above the 200-day. This is usually a very ominous sign. Now, it doesn't mean that you can't go higher and diverge even more, and it could become more ominous, or it could improve. It could improve, turn up, and still have a divergence, still be in a downtrend. And, a longer term, larger top is forming as you're getting thinner and thinner. The air, as you go up, like when you climb a mountain, the higher you go, the air gets thinner and thinner. That's sort of what's happening here. And we want to keep an eye on that. But again, we're not trying to time, the index. We're trying to time individual stock trades, and a lot easier to do than time the index. And also because you have a lot more opportunities to go in and out and to be able to trade. The index is, you're not going to get the type of upside you would get in individual stocks, and you're not going to get the number of trading opportunities. So right now we have a lack of participation, right? Which means that the environment is selective. And that means that you need to be, if you're bullish, which we are still bullish longer term, but you need to be cautiously bullish until things start working. So you try a few names. If you get some traction, fine. We tried a couple new names here. I put on the SOX index. We tried a few things, not working great just yet, but not stopping us out. So I'll go over those in just a second. Same rules apply. You go in there, you get some traction, great. You step it up. If not, you pull your horns back. The key is to be prepared for the other side of the trade. Always be prepared for the opposite side of the trade. You're in cash, be prepared to get invested, quickly. Things start working. You want to move fast to get back in the market. If you're invested and you're at risk, well, be prepared to cut and run if things go bad. Always be prepared for the other side of the trade. Okay, so also for those of you who haven't or didn't watch the tutorial or the preview of our updated platform, which we've now named MonAlert, stands for monitoring and alerting, MonAlert platform. Of course, still Minervini private access, but we wanted to give the platform a name other than the platform or the MPA platform. So anyway, this new updated platform has a bunch of features. It's much faster. It's much the distribution of the way the information goes out is just way better. It's 1,000 times better on my side to me for me. I'll be able to go really fast and send information out to you. So it's been improved in a lot of ways. The analytics has some additional features and some enhancements and some upgrades. The app has been upgraded. You can also now watch videos through the app, which is really nice. You don't have to go on your computer. You could be right on your phone and go and watch the videos. Watch this video. So there is a little there is a little tutorial or preview with Bob and I on there, and it's in the archive, in the video archive section. So if you didn't watch it, you should watch it because there's some good new features there. All right, let's take a look here. We'll look at some stocks. I wanted to just start off with, if you want to bottom fish, and when I say bottom fish, I don't mean trying to buy the low, but trying to buy, some of these larger bases coming up the right side and get him, as low as possible. This is why I developed the cheat and the low cheat, was because I saw nice pivots where you can buy these bases coming out. A lot of people think that the stock has to make a new high for it to break out. That's not true. We're trying to buy as low in the base as possible, but we want to give the base the opportunity or the time that it needs to complete itself, where now the line of least resistance is up, you're in a new uptrend, and we've got a reliable bottom that's established. So I saw I always watch the ARK funds. I like to see, what this whole Cathie Wood craze, going on. And I like to see, how that's performing, because it was performing so well for so long and it's been underperforming now. I'm curious to see if, we're going to be able to get back on track with some of these names. Now, we're starting to form a we're starting to form a cheat area here. It's actually a little low cheat within a big cheat of a big base, and this is exactly how I'd like to trade stocks. And so if you're a fan of the ARK funds and you've been wanting to get on board, this is probably a time where you should start watching it. If you get through this pivot here above I don't know, 123.42, that's where I would start to buy there. Maybe use a stop of this low right here. If you can then move up and maybe, keep basing here, maybe the next time will be above this 132.50 if you can form a pivot there. And you start building a position maybe in here. But again, this would be a good sign if we can get the ARK funds to get back on track here. That might be also an indication, when we see these breakouts occur in the FFTY and so forth. I'd want to see some action here too. Again, I've been watching some of these indexes. As you know, I went into the SOX, had a decent breakout here, follow through on Friday, looking pretty good, getting into new high ground, coming out of a good sized base. So that's acting pretty good. And there's a bunch of semiconductor stocks that are fueling this. So there's been some breakouts there too. Also, the IBB, Mark Ritchie and I have both been watching the IBB lately. You did come out here. Now you're just pulling back. I like this big base that's forming here. So maybe, individual biotech stocks are setting up too that you might want to look for. But if you want to play the on a wider basis or maybe a little less risky, if you're thinking the ETF, it is looking pretty good here. So I'm watching that as well. I might put some ETFs in here if I can't find individual stocks at low risk entry points. Just mentioning, sort of that bottom, fishing type of style coming off of these big bases, something like maybe, a PLUG. Here's another one where you're below the 200, but the 200 is in an uptrend. You might get a good trade out of this and put yourself in a position to hold off of a big deep base. I won't trade these normally. I generally won't trade these. I'll point this stuff out to give you some more, tools in the tool bag, if you will, or maybe, if you're looking at some of these names, some of them have some decent fundamentals, but if the price isn't confirming, I just don't get involved. Something like a FUBO. Yeah, I know some very smart people that are buying these names down here. So, again, that's not a reason I'm going to buy, but something like this FUBO, again, looking at the right side here, you're getting a little cheat area forming right here. If it comes through there, this is the way you would want to go into a name that had a big decline. If you get a big decline, you got to be very careful buying as it just comes right back up into that supply. But if you form a large base, the larger the decline, the larger the decline, the larger the base you're going to need. This is the way you want to try to look at those type of names. I'd rather be looking at names that are holding up a lot better, something like this PANW, which is held up, quite nicely in a big base here. It doesn't have as big of a decline here. You see right here, if we measure this decline down here is about 22, 23%. So that's not, you don't have a whole lot of overhead supply to get through. We bought it right here, obviously, as it was clearing out through this area right here. Since then, it pulled back. It's been acting pretty good, about 5.75% on that. Had a few names like WMS, tried to break out recently, had this little tight little pivot, came out. You got a squat here. So keeping these on a pretty tight leash. If you want to give them a little bit more room, maybe I am putting pretty tight stops. But so far, okay. We did take out the low in the squat day. That's not the greatest sign, but I'd like to see this reversal recovery this week. SKY is another one that so recently broke out. I wanted to buy this on the breakout, and I did not. But I got a chance as it pulled back. And when I do this, I really want to see a good close. I buy it. I don't want it to die on the vine and to close down at that low or never rally. I usually try to buy these pullbacks if they're like usually early in the day, and then I'm hoping that we get a decent close. This was a pretty good close. We closed a little bit, back up in the range here. So far so good. Up about 1.5% on this. Let's see here. Of course, bought that on Friday. And CEIX was another one where it came out here over on 726. And then as it pulled back for a few days, it started to turn back up. That's where I went in there and bought that. And we had a good day that day. Now we've pulled back. It's acting very normal. This is normal, only up about 1% on it, but it is acting normal. So we're not seeing anything, ripping out here that we're getting big profits, but we're starting to take a few pilot buys here and get some feedback here. And so far it's about neutral. Google, of course, we've had and we're up about 6% on. It was up more here, of course, as it ran up, but still holding. And you can be using a break-even stop on that now with a partial position. As far as BioAlert, I have to say I don't have a lot of names that I would really say are ready to go. There's a handful, but I'm a little disappointed in the list this week. I was hoping we had a better list. Starting with some names, ATLC, maybe for a trade here. You can see it's tightening up here. And again, some of these might be really thin. So just take that into consideration. I'm not going to comment on that right now. Some are maybe really thin. You may not want to buy them. I know I saw a few names that I was looking at that traded like 16,000 shares a day, which I probably just stay away from or only buy 1,000 shares of. So here, pretty tight here. This breaks out. This AHRT, another one where you've got a little low cheat here. You got a tight for a couple days, little nice reversal right here. So this is a nice little cheat area. So that breaks out. Again, please don't buy these, pre-market or put orders in pre-market and try and gap these out. We want to give them a chance to open, hopefully open quietly, and a chance to pivot and buy them as they're moving through the pivot. You don't want to try to front run ahead and pre-market, and you'll end up gapping them out, and then we'll all miss them. Because I'm not going to chase a gap. Let's see here. So KMX still trying to tighten up over here, a little sloppy, but trying to build a decent sized base. ODP is another one which is trying to build that big base and was getting tight. Had a little shakeout here day on Friday. We'll see if it can move through that pivot. THRY, another one. We're forming a little tight pivot here. Smaller little base. I feel like I'm scraping the bottom of the barrel still. I have to tell you, I still feel like I'm scraping the barrel here. I'm just not seeing really what I want to see in this market. So I'm being real careful. I'm sort of chipping away still. I took a few pretty good sized positions in some of these trades and traded out of some of them that I got, fortunate to have them go up like a CEIX, ran up intraday. So I was able to, take some profit and cushion my longer term trade, or even holding it for whatever length of time past a quick trade. DAC, another one, forming a little little cheat area right here. So again, that starts moving up here. Now moving down to sort of my on deck names, DDS, pretty tight here, but really small, just a small little base, extended base down here. It's a pretty nice base. This is a pretty big base here, breaks out, then really starts taking off here. Now, you're getting into, an extended stock here. So, more of a tradable situation, something like GDEN. Again, trying to form a little pivot right here. GHLD, I think this is the one that was real thin. I remember there's one that was trading 16,000 shares a day. GHLD, I think this is it. Average volume 17,600. So yeah, this is super thin. So you got to be real careful with this one. But this is setting up a little base here. GPRE, another one, I talked about this a few times. Was tightening up, had a little quick shakeout, and now moved into new high ground here. So that's that looks fairly decent. HLIO, that broke out here on Thursday. As a matter of fact, a few of the names that broke out, let me just point those out. You got JHG broke out. That was on our buy alert list. That broke out pretty nice, actually, last week on Thursday. AMD, I guess that, maybe this chip shortage or whatever, I'm not sure exactly what's going on, but really ripped here out of a decent sized base, maybe on a pullback. I don't know if you're even going to get it, but big volume ripping this thing higher. So I've been watching that, but it's just too extended for me to mess around with that at this point. Snap is another one that, came out here. We bought it over here, and it came in and had the, basically was shaken out. Probably most people that were buying out of this space, but then came ripping back on earnings. And now, you could try to play a post earnings gap. I don't generally play those, but came out really strong. MRVL is one of the stocks that broke out in the semiconductor area, and this SKX, another one that came ripping straight off the lows here, trying to tighten up. And you've got what we call a slingshot, or this is another type of Hardaway crossover where they suck you in and then undercut the lows and then come ripping out. And then of course I talked about SKY. Let's see. So where were we? Whoops. Let me scroll up here. Oh, Joan, Joan. Trying to build the right side here, a recent new issue. So Joanne Fabrics. It's Levi, of course, Levi Strauss Company makes the jeans. I've been watching this for a while. It's just a little too funky in this right side and wedging up. So I stayed away from this breakout. But since then, now you've come in here and it looks like it still needs work, but I'm watching this. Good fundamentals. MTW, another one, forming a little cheat area here on the right. These are lower on deck for me. These aren't my higher on first 5 or 6 names were the ones that were more buy alert candidates. These are just on deck for me. So again, this OMI, we've been watching this for 2 weeks now. ONEW, that needs more work on the right side. SIC. Yeah, this is a lower price. This is one that a member sent in on the symbol Dropbox. That's how I saw it. I don't know. I mean, a $10 stock, it looks okay, but I'll probably stay away from it myself. TDC, another one that's got a little pivot here. I don't really know what's going on here. Big gap up, then bang down on a big day, all over the place, but tightening up here on the right side. TXT is another one where you've got it tried to stick its little head out over here and then came in, and now you got a good close. This may work. I'm going to watch this and see if we can get that to tighten up. Yeti recently came out. Again, Hardaway crossover, breakout, shakeout, rip back to new highs. Very frustrating situation if you're in. But when you get in that type of market and you're seeing that happening a lot, sometimes you got to just sit back and you got to let it happen and wait it out. And here we've got this ZI, which let's see here. So this is trying to form a pivot here. You got some supply here. There hasn't been a lot of trading up there, but it is a little funky right here. A little bit volatile. So one that I'm watching here. So there's a handful of names on watch. I'm not going to go through, but that's basically what I'm looking at this point. I'm not seeing a whole lot. I don't. Amazon got cracked, and this is. This is the best of the best, right? And again, this is another reason why we take profits into strength and cushion ourselves. And then when we go into an earnings report, you go into an overnight situation, you get this gap, you don't get your head handed to you. But again, I just feel like, we are late stage here, and money is going into these big cap names that, been going into for years and years and years. But at some point, we're going to need to rotate, get new leadership, and see the small and mid cap names really start to work. And then that's when we can get a really great environment. At some point, that's going to happen. You're going to have a tremendous trading opportunity. Just be patient. And if you're getting whipped around, just try to, pull back and just wait it out. But the longer that it takes to get to that really great trading environment, usually the better it is. And in my experience in 37 years, every single time that's the way it's worked. When you had a lot of difficulty, you shook out a lot of weak hands. And then when you shake out all those weak hands, you get a great environment. So the people who are patient and wait and are disciplined, they make a fortune, while those who want a quick buck and quit, they sit there and they watch the disciplined make lots of money and wish that they would have remained disciplined. So just stay in that camp and wait it out if you're not doing well. I know we hear from a lot of you. You guys are doing really great. A lot of short term. A lot of people changed over to shorter term. Grabbing those quick profits and tightening up those losses. And we've seen we heard some stories of some really good trading results here from you guys. So I'm very happy to hear that. Proud of you guys, especially those in the U.S. Investing Championship that are doing great. So let's see what this next month brings, and we'll monitor the platform. And the platform, like I said, is faster and better than ever. So certainly helping from our side, and I think it'll be a better experience from your side. All righty, talk to you guys later. And if you haven't, buy a Trade Like a Champion cap, so we're going to donate money to charity. Okay, talk to you guys later. Bye-bye on Amazon.